So once I have identified my point of interest, the imbalance, institutional candlestick, all in the premium zone. We call this premium zone, everywhere below the 50%. All right. Now you're going to go on a smaller time frame and see the validity of your first point of interest, second point of interest, and the third point of interest. So we're going to scale down to the 2-hour time frame. We can see that our first point of interest has still got the imbalance, but then our second point of interest has the imbalance almost filled up, right? Our institutional candlestick is still intact on a 2-hour time frame. Now we're going to go on 1 hour. On the 1 hour time frame, the imbalance of our first point of interest is still there, second point of interest is still there, but then the institutional candlestick has disappeared, and now we have what we call an imbalance. So you scaling in, you moving it as you move down the price. Right? Now we go to the 30 minutes time frame. We're still looking at the same areas. The 30 minutes time frame, we can clearly see that now we have a clear institutional candlestick for our first point of interest. Our second point of interest, we can see there wasn't another institutional candlestick right here, which is not mitigated, but then there is an imbalance. So we still have a valid point of interest in our second point of entry. Our third point of interest, we still see the institutional candlestick appearing again on the 30 minutes time frame. We go to the 15 minutes time frame. Now on the 15 minutes time frame, we can move our entry, first point of entry to the 15 minutes institutional candlestick. Our second point of entry, our second point of interest, we can see the imbalance is beginning to disappear on the smaller time frame. Can you see that?
Yeah, I can.
Good. Right, so now our point of interest, we're beginning to reduce them as we go on a smaller time frame. On the 5 minutes time frame, we can clearly see that this institutional candlestick is still valid for our first point of interest. Let's go on our second point of interest. Second point of interest, now our entry is down here. And our third point of interest is still intact, right? 3 minutes time frame. So you have to exhaust your entry and go in for the best one. This is what Nana mean by be good at reacting. So our first point of interest is still intact. Our second point of interest is still intact. We're still going to leave the entry here because this is a dodgy candle. We don't like it, a hammer or whatever it is. We don't like it. This area is still intact nicely. So our institutional candlestick on the 3 minutes time frame. You can choose not to go any lower because at the moment, you have good risk to reward already, right? So already, before you leave, as busy as you are, you're going to set your alert to this price zone, this price zone, this price zone.
Yeah.
Right? You have 3 points of interest. And for every point of interest, you're going to put your stop losses in place. Because we are playing off institutional candlestick, we have an imbalance here, so our stop loss is going to be here to allow room for movement. And this one, our stop loss is going to be here. For this one, our stop loss is going to be here. In that case, know for a fact that now you have set up all your entries and all your stop losses, right? So this is how your setups are going to look like. Well, my lines are not straight. Let's see if I can. Change them into hours. Oh, give me a sec, guys. Let's correct these mistakes. Right, once we've been able to do all this, oh, sorry, I've deleted the actual one, the right one. But yeah, you know what I mean? I'm struggling to actually do this. But now you know your point of interest, 1 point of interest, 2 point of interest, 3. You are now going to set your alert here, here, and here. Once this alert hits, this is what you want to see on the 1 minute time frame. Come on. So in the 1 minute time frame, you want to see something like this. Exactly one of the pictures like this. From this low, you start seeing a high, and you see a low that do not break it, another high. Once you get this at any of your point of interest, this is where you enter the market. You can do market execution straight away. This is what Nana means by be quick at reacting. Okay, and still in your stop loss. So if this do not happen around this area, you do not enter. If this do not happen around this area, you do not enter. If it don't happen around this area, then you do not enter. But anywhere you get that, Nana calls this a W. You need to see a W on a smaller time frame. Can you see that W? Yeah. That's a point of interest. You need to see this shape. But then the W has to have the second point higher than the lower one, the first one. Does that make sense?
Yeah, it makes sense.
Immediately you get this, market execution, you're in. And you still maintain your stop loss. Until you get a clean break of market structure, or you get to the price area where you're happy with maybe 15 pips in profit, 20 pips in profit, move your stop loss to entry. Does that answer the question?
Yeah, it does. Thank you, Francis. That was really detailed. What would, so you'd put your alerts on, and one question to kind of follow up on that is, let's say you were looking for, you found imbalances above and below. What would you say would be the main, what would be your, I'm trying to find the words. Basically, what I've seen is that it favors a higher imbalance more than a lower one. Is that just because it's trying to get as much liquidity as possible?
The thing is about pricing, right? I always say this, and the reason why I don't stop saying it is because they in as much as they have lots of money, they are quite cheap, right? So this is 10% off, 20% off, 30% off, 50% off, 60% off, 71% off, 78% off, 88% off. The banks are quite cheap in such a way that they would rather want price to come all the way as lower as possible before they will enter the market.
Okay.
Does that answer the question?
Yeah, it does. Thank you so much. Thank you.
The same way you would always go for the lowest price. When we're doing sales, do you see how many people in the shops? The same way the market people, the market makers are. When there is sales in price action, immediately price drops down into the premium area. That is where you see lots of the big men coming in to do their shopping. It's the same in the Forex market. With me right now, if I'm looking at dollar currency, I'm not looking at anywhere to enter. Even my first point of interest, it does not entice me. If I look around this area, I've sent some videos to some people already, and if they have started watching it, they can see clearly that everywhere in this area is called a key area. a key level. And if I should extend the line, you see how many times price has been touching that area and reversing.
Francis, can I come in?
Yes, please.
So okay, all right, cool. Go back to where you were. I can see I'm being recorded. So my name is David.
Yeah, this is here.
Okay. So if you look at where we've got that, you know where he's drawn his box, right? Where he's drawn his box. So the first part of that box, right? What makes me believe that price will come down is we've got relatively equal lows. Is that right?
Yes.
Yeah, so we've got that relatively equal lows over there, right? So all I'm expecting is price would go up. There is an IFU candle over there, probably reject off that one, and then straight we come down to anywhere within that zone where he's marked. However, like he said, when it comes to discount and premium areas, right? You as the trader, you would have to decide where you take your trades, right? So he drew the fibs from the 61.8 to the 88 zone, right? But every trader has got his or her own rules. I personally, I wouldn't take trades in the 61.8, right? I would take it from anywhere from the 71 onwards or 70.9 to the 88.6. So then if the trade comes to 68 and it reverses back, fine. I mean, no stress about it. I've set my rules and I'm sticking to the rules, right? Other than that, you would have to be fast to react to whatever price gives you. So if you want to play by all the three zones he said, fine, but you have to be fast because sometimes it will bounce off the 68, 71, 88. But you would have to set your rules as a trader to say, listen, I'm only interested in the 61.8, all the rest I'm not interested. Or you would say, I'm only interested in the 88.6, all the rest I'm not interested. So in that way, you're not taking almost every trade that's in your zone. You just wait for the best setup and then you go in. Yeah, that's all I can say.
Thank you so much, Dave.
Thank you.
You're welcome.
You can clearly see on here, right? Look at the way now we have a clean setup lining up for us. Can anybody see it? I think Misha is just marking it up. Right? So you can tell that always these people, they're quite cheap. They know exactly what they want in the market. Don't be fooled. Just like Nana said, sorry. Just like Dave said on the call, right? He's always gonna go for beneath 71%. And trust me, if you start looking around 71%, the likelihood of you hitting your stop loss is very little compared to taking your entries from the 50%, 61%. So the lower you are in the premium box, the higher your probability of your trade going right. Set your rules, understand exactly where you want to. If you don't want to set the rules and you want to watch all the price areas, then fair enough. On your smaller time frame, make sure you see the W with the second part higher than the first part before you enter the trade. Do not do a limit order.
Okay.
I hope this helps everybody.
It really does. Thank you very much.
Okay. So
A quick question, Francis.
yeah.
You know your liquidity at the top. Yeah, there. Can I ask why you put that there? Because we've already like you got the FU candle there, so that's taking that out. So I
The reason why I put that liquidity at the top for you to actually know is because we had a clean reaction from this institutional candlestick, right? Can everybody see that?
Yeah.
We had a clean reaction from there. But then instead of price to actually continue going down, they did a shake up. So everybody that had a good entry here thinking that, oh, I sniped it, they came back again to take you out before the second drop. That is why David was saying on the call that this is an FU zone. So for FU zone, there is likely that they're going to come back to revisit that area for the actual move down. So there's likelihood that we're going to see something like this before the move down, then upwards. Does that answer your question?
Yeah.
Perfect.
Yeah.
Francis, leave it there for me. All right, cool. So if you look at where he's drawn his horizontal line and then put the pound sign over there, right? If you look to the right, you could see that candle, that blue candle, and then the wick, that is a liquidity purge, yeah. So it took out everything. It took out all those highs over there. So for me, right, that candle, Francis, bring yeah, so highlight that candle for that blue candle, please. Exactly. Cool. And then also, you know when you come down a bit, let's say where you've got the W, the equal tops, mark that one too for me before that FU candle.
Which side are you talking about?
So I'm talking about the, how can I show you this? Let me see if I can draw on it.
Okay.
Hold on.
The annotation.
Hold on. Where can I draw? I know some people can draw on it.
Yeah, go on the annotation. You're able to annotate on my chart.
Okay. Oh, where's the annotation? I'm clicking it, but it's not coming up. Hold on.
I don't know how to show you, but then if you look on your Zoom toolbar, you should see sort of like if you go around the mall, right?
Hold on. So where is that toolbar? So of course. Hold on. Let me see. Raise hand. No, it's fine. Let's just continue. So just below the beginning of the FU candle, just below it, you can see a W. No, downwards. Yeah, that area. Yeah. So put a horizontal line across there for me.
Okay.
Yeah. So that is relatively equal tops, right? So now that candle which Francis highlighted, that blue candle on your right, came out. It took that one and then it took the top, and the wick even went to take the highest point within that range. So now that is the candle I'm waiting for it to play off now. So this one too came back down. That bearish movement came back down. It broke market structure over that first. This is the 4-hour time frame. You know the bottom, yeah, where the Keza is now.
Okay.
No, go up a bit. Yeah, that one too broke market structure, but the first point where it broke market structure, go up a bit at the beginning. Yeah. So go on a smaller time frame. Let's see. Good. So it came up and then it broke that market structure over there, and then it came back down again, forming relatively equal lows, right? So all I'm expecting is you can also pull your fibs from the top to the bottom, and then you find your point of interest, whether it's the 61.8 or the 71.8 wherever you want to find it, right? So you can see where Francis drew his markup, the point of interest lines up perfectly with the 71.8, which I'm more than happy to take the trade over there. Anywhere below the 71.8, I'm not interested. It can come and then with me. I'm not interested. But you can see that point where it has the 50%. You can also get that candle over there being mitigated at. But for me, it's not my rule. I don't like the 50s. I like the 71s. So you would have to define whatever that works with you, and then whatever you're willing to risk your money for.
And even on the 1 hour, we can refine our entry to the 78%, which is an imbalance fill right there. Right. But then even now, if you go on a smaller time frame, I am quite sure we can even find a really, really smooth entry, which is even there. And still, you're gonna maintain your stop loss above this high. Because remember, this is a key area where they took liquidity, so they have the potential of coming back there again.
I want to zoom out a bit for me, please. Zoom out. Okay, cool. So you can see the 50% where I said the candle could come and mitigate, right? Those levels over there are relatively equal tops.
Yep.
Right? So if you zoom out, they are relatively equal tops. So for me, I'm not comfortable playing off that 50%, seeing that thing up on top of that. Right? I'm not comfortable. But that is not to say that we cannot reject from there. But for me, looking at what I can see now on the 15 minutes, I'm not comfortable taking that trade over there.
In that rejection, I wouldn't take it. If they reject from here, I don't care because of this equal high. There is a potential of price coming back up again to work it out. So guys, you always have to set your own ground rules in terms of trading smart money. If I have liquidity above my entry, I'm not entering it. I'm not entering around there. If I have imbalance above my entry, no way. I'm not taking that trade. So you need to be able to actually squeeze yourself. Looking at this area right now, what do you see? With a low, a high, we didn't create another low. Right? We didn't create another low. And we've broken market structure again. This is some of the things that you need to look at. So from here to there, created a higher low. Remember, the wicks do not matter, right? And this one has just broken this high. So any retracement coming back around this area, that is when you're going to pull your fib, right? Assuming price is going to reverse from here, you're going to pull your fib just here. And everywhere below the 50%, you can see there is an imbalance in here and here. There is a very big candlestick. For me, immediately I see this big candlestick, I know that this is where the bank came in. So I'm not even going to consider here. I am going to wait and probably fib around the 50%. I'm going to fib 50% of this area. And this will be my entry, my point of interest. Assuming price come back here before it goes up. Right? And my stop loss will be here. Even though the stop loss is huge, but it's better I put it at the 50% because this is where the institutional move happened. Even though there's an institutional candlestick here. But then the actual move is this. And if we had the fixed range tool, which I don't have, you would see that the exact where they came, where the money is actually sitting, you could have been able to identify it. If you have a premium trading view, you could use this tool. It's called fixed range. I don't know if anybody on this call have a premium trading view. Fixed range. If you pull it from here to here, you can clearly tell how much money was put inside this candlestick and where the imbalance actually is. I hope that helps. Do I still have people on the call?
Yes, yes. Thank you.
Thank you. So
Yes.
Excuse me, sorry, Francis. Can you show us? Can you give us an example of that fixed range indicator, please, so we can see what you're talking about, please?
I don't have a premium trading view, so I won't be able to use it. But then if I had it, and I go to my indicators and select it, right? I don't have it, so it wouldn't even allow me to take it. It's like the Fibonacci tool. So the same area that I'm looking for the imbalance, I'm only going to pull the fixed range from there to the imbalance field.
Okay.
So assuming there is an imbalance here, I'm going to pull the fixed range from here to here, right? And you're going to see clearly the exact area where the imbalances actually are, where there wasn't good money. Do you recommend we buy pro? If you want to be a pro trader, yes, it's really good. It's really good you have a pro trading view, which allows you to do more. There are so many things that people are doing on trading view that we're not seeing, we're not able to do because we don't have the premium. But guys, once you're able to use all those things, it takes your trading to another level.
Francis.
Yep.
How come you don't have the pro account on TradingView? What's stopping you?
Because I'm doing fine with what I'm doing right now.
That is not the truth. The truth is, right, he likes to buy in premium and discount areas. So he would wait for it to come down and then he buys. So now whatever he's using are discounted tools.
I see.
And then Nerissa, with regards to entry, I saw Francis breaking it right down. Is it clear or is there any doubt or how are you finding it? Because you came up with the entries and then I think Augusta. So let's address it whilst we are here. I'm not saying
Not less than a minute on this call. Can we drop back here?
Okay. Yeah, I think it was Antonio and I, but I think Mika